Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is Wednesday, October the 9th, 2013, and here's today's After the Bell Market Summary brought to you by WallStreetTrading.com. If you have not been to the website yet, go check it out. There's a lot of informative information on the website in regards to trading education, and if you're interested in trading with our firm, you can find out more details on the site as well. If you have not been to our online chat room yet, it's mywallstreettv.com. The password to log in is SMART, SMART. Come check it out. And if you want to get more than the 14 days of free trial, you want to make sure you go to the online, our homepage on the website on the right-hand side and fill out that form. All right. Aside from that, let's go ahead and jump into the charts here. A lot of information to go over today. I want to put together a good video here where we look at all the different sectors in the market. So let's go ahead and get this started. Let's first start by taking a look at the SPY. Actually, let's take a look to see how the markets closed first here. The Dow closed up 26.5 points. The Nasdaq closed down 17. The S&P 500 closed up a point. If we take a look at the breadth on the market today, we had 3,341 issues declining on the NYC, Nasdaq, and the AMEX. We had 2,905 issues advancing on the NYC, Nasdaq, and the AMEX. So pretty much pretty much a mixed market here. We really don't see a big move in favor of the bears or a big move in favor of the bulls as far as the underlying breadth goes. So pretty much mixed, and we're seeing that, of course, when we look across the different sectors. We had some strength in the technology sector with the HPQ up over 8% today. I'm pretty sure that was news related. We had Verizon and AT&T was up close to 2% today. Apple was up 1%, and then a lot of mixed action in the semiconductors. The banks, they held up pretty well today. Bank of America showed some relative strength today, so the financials are strong by the week's end. Make sure you take a look at Bank of America. That was up today pretty nice, up 1% or so, but definitely showed some relative strength compared to the other financials. Then just some mixed action in that financial sector. Continue to see a little bit of weakness again in the healthcare sector, in the biotechs. Amgen down over 1.25%, Celgene down over 1%, Merck down 1%. So some profit taking going on in the healthcare. We're also seeing that strength that rotate into the utility stocks, as some people are looking for those little safe havens and high yield stocks there with those dividends. And we saw some weakness today in the basic material sector. You had CLF down close to 1.5%, SLB down 1%, MUR, Murphy Oil down 1.5%. So let's go and jump into the charts here, starting with the S&P 500, the SPY ETF, which is the S&P 500 ETF here, the SPY. And you can see we're at this key trend line. I have it marked here with these little green arrows. From the gap up that we had at the start of the year, you take that low, you see another low that's connected right here. Move your charts over, you see another low. That key trend line still in play, but then guess what? Today, we actually hit that trend line, and we got a nice little bounce off the low. So could this be a little short-term bottom in the markets today? Possibly. All right, around 11 o'clock, we formed a nice little bottoming tail on the 15-minute chart, the ES, and that did, in fact, mark the low of the day. All right, we have come a long way all the way from, say, 173.75 all the way down to a low that we hit today of 164.53. Okay, so about 9 points off the highs that we made back here on September the 19th against this key trend line. So now I'm not really interested in getting short down here, even though I'm not saying that we could go lower, but the probability of getting short down here looking for another move is not that high, I would think, here, especially since the market's still in an uptrend, as you can see from the start of the year. It's not really until we break this trend line that we could get real bearish. I would say if we break below the trend line and then we take out this pivot right here, 163, then it could really get ugly. But aside from that, as long as we can hold above to say this 165 area, this key trend line that I'm showing you guys right now, I think we have a chance of maybe chopping around down here, then possibly getting a nice little decent bounce up. So if that's going to happen, we really got to make sure we start looking out for some stocks that are, that have pulled back into some key moving averages or some key support levels. All right, and then if we do get a bounce, all right, you want to make sure you take a look to see what stocks are bouncing, and the ones that are not bouncing, if the market was to get a slight bounce and roll back over, those would be the ones that you want to short. All right, so let's go ahead and put the moving averages back on the chart. Again, the levels you want to watch tomorrow going forward, today's lows, okay, will be a pivot to watch. If we break over today's highs in the SPY, which was 166.20, we could possibly get a move back up, say, towards 167 if we have those buyers that are really interested in getting back into the markets, which right now I would say the sellers are a little bit in control, right? We're back below this key 167.5 level. which you can see below that level they were selling, above that level they were buying. All right, below that level they're selling. This is the key inflection level, 167.5. All right, and that level is going to be a area that we're going to be watching for if we do get a bounce right back up. Let's go ahead and take a look at the ES now. All right, I want to make sure I go over everything with you guys. Taking a look at the ES. The ES is that interesting area here, 1648, or call it 1650. You can see how 1650 was a resistance level back here back in June. We broke above it, buyers came in. We broke below it, sellers came in. We broke back above it, buyers came in. So that's another key inflection level on the ES. If we start holding below 1650, look for a move down here towards 1627. If we get back above 1650, look for a move back up towards that 1670 level right there, 16, call it 1667. This level that we had the breakdown. Okay, we could get a little bounce up there, put a lower high end, and see if this downtrend that we're in right now continues. All right. And then again, if we break below today's lows, which was 1640 on the ES today, we could look for a move back down towards those 1627s. Let's go and take a look at the Nasdaq 100, the triple Qs, the ETF here. Triple Qs was not able to hold above 77.28. We're breaking below the 50-day moving average, which is this gray moving average right here. Okay, you can see we closed below that 2 days in a row. A slight close below that moving average yesterday, and another close below that moving average today. And we're also back below this key trend line that I have right here, which was where the breakout occurred back in early September. So unless we get back above 77.30, all right, we could be looking for the triple Qs to continue to flow its way back down towards the demand zone right here around 75.30, which also lines up with this key trend line that we were tracking from earlier in the year. The little top black trend line you have right there, you see it going across. You see how it acted relevant right here. It acted relevant on the breakout right here. So it's definitely a trend line that I'm going to be watching pretty closely if we were to sell back down towards 75.30. That 75.30 also coincides with the 100-day simple and exponential moving average right here at 75.5, 75.30 area. So keep that area on watch if we continue to see more selling pressure. All right. Also, again, it comes with a nice support level. If we get down and we start to hold, we'll be looking for some nice technology stocks to buy on that pullback if that level holds. All right. And we take a look at the NQ, the Nasdaq. We have this little proprietary channel analysis I've been showing you guys from my system. Take a look what happened. We broke above that little range that we were tracking with you guys and showing you guys. All right, and oops, I did not mean to do that, so I gotta fix that. But in any case, we broke that little top of the trend line right there. All right, this was the bottom of the channel that we were watching. See how support, resistance, it finally broke, then it rallied up. Well, this action right here looks like a rounding top a little bit there. Okay, and we're back inside this little area. So if we break, I would say below today's lows, and we start breaking below this little trend line support that I have right here, that's at an angle. I would expect them to take the market all the way back down, say towards 30.60 on the Nasdaq futures, which then lines up with that nice little consolidation that we were watching back here from when we called the breakout from this little range action that we have right here. All right, if you guys go back to the videos that we were making back here in April, you would have seen that we called the moving in technology stocks way before, I would say at least 2 weeks before CNBC and the media started calling out the technology sector as a buy. That's when it was up here. Then you can see it rallied up a little bit, rolled over, held the bottom of that trend line that we were tracking from our proprietary channel analysis system, and then it took off to the races. Little sideways action right here in the range. All right, broke out the range. Little bull trap action right here, fell back in the range, broke out the range, tried to rally up, then again got rejected up here, and now it's back down towards the bottom. So if we do break below today's lows, we break below this trend line, we're going to be looking for a test of this area right here, which comes from the top of that little yellow shaded area that I have from this little range action back here. Okay, I know I went through that kind of fast, but if you have to rewind the video a couple times to see what we're looking at, then you're more than welcome to do that. But it's definitely a key trend line, a key area that we're going to be watching closely. Take a look at the IWM. All right, the Russell 2000, I took the moving averages off here, by the way, so the charts could look a little bit cleaner here. Russell 2000 has a nice clean channel in it. And right now, we're moving our way back towards the bottom of the channel, which happens to be right here, this little key trend line. All right, which happens to be around, say, 102.5. And then we also have some support on the Russell 2000 right here at 102. If you guys see this nice little consolidation that happened right here. All right, well, that consolidation, that resistance is now going to act as support. So 102 is going to be a decent level to watch on the IWM if we were to sell off to that level in the next 2 days here. I'm actually going to write that down right now because that's actually would be a decent level to try to get a scalp off of during the intraday session. Or better yet, if we hold this channel, then we'll be looking for a move back up. Now, what were the signs that the Russell 2000 was going to potentially roll over? Well, the signs were that we were not able to make it to the top of the channel, right? We have a nice little channel right here. If the market's strong, it would have held above the 50% trend line of the channel, which I believe I touched base with you guys last week and told you how it's making a little ascending triangle. It broke out and it failed and it pulled right back in below the 50% line of the channel. And now we could be forming a head and shoulders pattern. If you guys know these upward channels, when they do break down, it's usually because of a head and shoulders pattern that forms. Actually, the top of that channel, this left part of this channel right here, forms the left shoulder, okay, which is right here. Then you have the head that forms right here. Then it usually comes right back down, bounces right back up, forms the right shoulder. That's how these upward channels tend to break down. All right. With the neckline on this right, in this case, would be around say that 99.50, 100 level. All right. But I don't want to get too ahead of myself here, so just keep in mind, keep an eye on that key 102 level. And if we could hold 103, which was the key level from before we broke out there, that would be even better. We can try to look for some longs down here in the IWM, maybe play some TNA. If the TNA doesn't work and we start rolling over more to the downside towards the 100 level, then you want to watch that TZA. All right, let's go and take a look at the volatility index here. We're back at the July or late June highs. All right, notice how we're back above 16. And notice how this little wedge triangle pattern broke out here and gave us early signs that we were going to be looking for some higher volatility prices. At the same time, we were holding above my little 16 level here, so we were looking for that volatility to pick up. If we break over 22, it could get real ugly, and we'll be looking for a move on the VIX back up here towards 23, which was the December high. But we'll see. As you guys know, every time the VIX gets above 16, or not, I'm sorry, gets above 19, all right, they sell it right back down. It's a repetitive process, looks like here, right? Repetitive pattern, I mean. You have it above 19, sold down, couldn't break above 19, sold down, went towards 19, sold down, broke above 19, sold down, and right now we're at 19. And if we hold a high bid above 19 and we don't break down, that's going to be a little different characteristic in the pattern that we've been seeing play out for the past 9 months or so, and that'll be something that we'll be looking for, and we'll probably expect the VIX to try to break past these highs right here and move towards 23. So be on the lookout. If the VIX continues to hold a high bid above 19, get ready for higher prices in the VIX and get ready for some more market volatility. We are moving closer to the debt ceiling date. All right, they do not raise the debt ceiling by the 17th, which is next Thursday. The government will not be able to pay their bills, as they say, and the whole economy will suffer. And I'm pretty sure, like everybody else, is that they're going to come up with something. We'll see. So let's take a look at the commodity space here. All the commodities were weak today. You had gold down 1.25%. Again, we do have a possible head and shoulders pattern that's forming in gold right here. You have your little left shoulder. Or you have your little left shoulder. You have your little head that could not break inside of a little channel that we broke down back here. That we broke down out of back here in April. So that head was formed at the resistance, came right back down towards the neckline in this area. We popped right back up, possibly forming this little right shoulder. And if we break below 1270 or so, that's when the fireworks could start for the downside on gold, and we can see some lower prices back down towards the key 1200 level. We break 1200 and we break 1180. This thing may want to go back down towards, I would say $1,000 an ounce. We'll see. All right. But right now, gold's definitely looking pretty bearish again, since it was not able to break back inside this little yellow channel here that we have, that we broke down out of. All right, we formed that inverted cup and handle pattern that actually played out pretty well with the measured move target. We rallied back up. We could not break above the channel, and now we're holding back below that channel, forming again, a complex head and shoulders pattern, or some may look at this as a little descending triangle that's trying to form right here. So either way, it's not looking bullish. Let me go ahead and take this out right there. Okay, so that's how it's looking right now. Let's go ahead and take a look at gold miners. The gold miners, the GDXJ, the gold mining juniors, they showed some relative strength yesterday. The gold miners, they showed a little bit of relative strength today, but if gold's looking weak, I wouldn't be a big fan of this sector quite yet. All right, GDXJ. Let's go and take a look at crude oil real quick. Crude oil futures. They were down $2 today. They're getting smacked down as well. They're having a tough time trying to hold above 102. If we come back down here towards 98, that would be, I would say, a 5-star level to buy. It was acting as resistance since back in February. We broke out here in July, and that's definitely going to be a good area. Prior support, all right, prior resistance now becomes support. So we'll be looking for some buyers down here at 98 if we continue to see some more selling pressure in crude oil, and it looks like it could break down tomorrow. So keep an eye on crude oil. If we break below, looks like 101. So if we break below 101 and we hold below that level, look for crude to start making its way back towards 98, which could, I think, in my opinion, will give a good buying opportunity to get long some crude oil, diversify yourself in some energy at a cheap price there on the pullback. Let's see what else here. See what copper is doing real quick. Have not been able to look at these on the daily time frame. Copper not looking too good. Nice little upward trend line right here that has broken, and also looks like a little symmetrical triangle right here that has broken down. What does this mean? If you're trading equities, you want to take a look at FCX. If you're looking to trade copper futures, well, then you want to possibly be looking to short copper tomorrow on any rallies. Any rallies in copper below 320. Let's see here. Any rise in copper below 326 and a quarter, you want to get short that. So we'll be looking at copper tomorrow as well. I'm actually going to do some research on the copper futures contracts to see what they're looking like on the margin requirements and everything. Because it definitely looks like there's some opportunity in this market right here. What else? Silver futures. Let's see how this is looking here. Silver down 2.5%. And silver is actually showing some interesting setups here in the pattern in the channel analysis. You can see how, take out the studies, you can see how it's respecting this key trend line right here. Oops, zoomed in too much. Right, you can see how it's respecting this key trend line right here and kind of forming like a little downward bullish channel off this up move. So we're going to be keeping a close eye on silver. All right, if silver does start to show some signs of strength, we'll be looking at possibly trading silver futures, possibly getting long some SLV, or there's many different ways to play it right now. It's a little bit too early, so we don't want to give any recommendations or give any ideas of what we're going to be looking to do. But definitely keep an eye on silver. It's kind of setting up in our channel right here. So we'll keep you guys posted on this right going forward for sure. All right, so let's go ahead and talk about some stocks. Starting off with FCX, since I see that copper chart was breaking down. FCX, this is a key stock to watch if you're looking at the basic materials sector. And right now, this stock's still holding up pretty well. It's still holding above this key 32 level that we broke out of here back last month on the 9th of September. See this little choppy range? We broke above it. So 32 would be a back test level. If we come down there and hold, that would be a good area to get long. But if we break back below 32 and hold below that level 32, look for a move back down towards 30. All right, so let's go ahead. I just wanted to show you guys that, but let's go ahead and talk about the big boy stocks. Apple, which was up over 1% today. This one's chopping around right now. They have earnings coming out here on October the 28th. Okay, so here at the end of the month, and it's probably going to trade sideways going into that number. Maybe it chops around a bit more, tries to pop up, tries to move down, but I would not be trading Apple right now. Most likely be waiting for earnings to come out because again, it's probably going to trade sideways until those numbers come out. Amazon, which was at the top right of the screen, you can see has now failed. So this action that we were having above 312 ended up being a bull trap. So anybody that was long Amazon for the past two and a half weeks or so, anybody that was long above 312, they got caught in a bull trap, and now they're getting, now their accounts are getting marked down unless they got hit for a stop loss out below this 310 level, which they should have had, because now it's trading 298. It's coming back into this little pivot level we had right here at 295 from the move up, move down, then move up. All right, so keep an eye on Amazon around this 295 level. If it breaks below 295, the next support level you can watch on is around 291. Prior resistance over here should act as support right here. Also lines up with the 100-day simple moving average. All right, HPQ. This stock was up close to 9% today. I'm pretty sure it was news related. I'm not sure what the news was, but keep this one on your radar. Does have a nice little target up here towards 23 and a quarter, and it has a nice gap fill all the way up here. I'm actually going to look to see what the news on this HPQ was once I get off this video. And we have a nice little downward trend line break right here from this little channel. So keep HPQ on your radar for tomorrow. Looks like a good stock to watch for buyable dip opportunities intraday. What else here? So take a look at the financials. All right, JP Morgan showed relative weakness today. We actually called that out for the chat room for a short. That trade worked out pretty well. JP Morgan ended up trading down and breaking below yesterday's lows and went lower. All right, Goldman Sachs. Be careful with this one if you think it's going to roll over. It's actually at some support right here from the 100-day. I'm sorry, from the 200-day simple moving average. And if you connect this little trend line right here, you can see it's also at some trend line support from the big channel that's been trading in. And again, if you watch our videos that we've been putting out for the past, week or so, we've been talking about the financials showing some relative weakness. We also talked about Goldman Sachs when it was all the way up here at 160 or so for a possible target down towards the bottom of that channel. So that target has been achieved. And if this cycle that Goldman Sachs is trading in continues, then you should not be looking to get short Goldman Sachs down here. You actually should be looking for long opportunities intraday on expectation that it's going to bounce like it's been doing here before. All right, so we'll see how that plays out. Do keep in mind they have earnings coming out next week on the 17th. All right. What else here? JP Morgan. Let's go and talk about JPM. All right, see here. JP Morgan, a little downward channel, chopping around this 51 level. If I was to take this little trend line out right here, let's see. If I was to take the little trend line out right there, you can see it's trading below this. It's trading between these key trend lines from this pivot high right here. All right, this little area, this low. Have a lot of action going on right here. Really trying to debate to see if this is a head and shoulders pattern that's forming on JP Morgan. Not quite sure yet, so I'm still just watching it, but definitely not one of the stronger banks out there. Definitely one of the weakest ones. You want to pay attention more or less to maybe Goldman Sachs at that support level of bounces. Bank of America showed some relative strength today. However, it's still a weak stock. Needs to get back above 14 before you even think about becoming bullish on the stock. They have earnings coming out next week as well on the 16th. So a lot of financials look to be coming out with earnings next week. So keep an eye on that. Be careful. Wells Fargo, they actually have earnings out on Friday, coming out on Friday, and this one has support down here at 39.40. If it comes down to 39.40 and that level holds, as that was this little choppy consolidation we had, then that would be good area. That would be a good area to buy Wells Fargo at 39.40. Let me take a look at some more stocks here. Qualcomm, semiconductor stock. This looks like it's in a downtrend, of course, from these highs. I would not be a buyer of this stock maybe until it pulls back in a little bit more. I would say, let's see. I would say wait for this stock to pull back down. Maybe it may try to come all the way back down towards, let's see here, prior resistance. When it broke out, should act as support. So it may try to come down all the way to 63, which is $2 lower. It's going to have some minor support around 65 from this little pivot right here, but also from these moving averages right there. Be careful with that one. Let's take a look at these momentum names that we've been tracking, right? Tesla, TSLA. All right, still remaining in its uptrend right here. It bounced today off the 50-day moving average. Keep an eye on this stock. All right, I'm not sure if the stock is going to be forming it's trying to form a little head and shoulders pattern right here. All right, but definitely keep an eye on it. If we start to see a lot of these head and shoulders patterns form across different stocks and different sectors, that's also going to be a warning sign that we could have more downside pressure to come. So we want to be on the lookout for those patterns. Netflix got smashed today, was down 4.5%, down $13.89, and it was able to hold some support at the 50-day moving average right here on the daily, but definitely does not look good for that momentum name. So Netflix under pressure, Tesla under pressure, GMCR, which was showing some relative strength earlier when the market was on its highs. This one started showing signs of weakness before the other ones did. This one rolled over and got smashed down today. We called this one for a short intraday in the chat room after it sold off and rallied back up. All right, this one gave a nice little intraday selling opportunity. We call this one for a short right here at 69.50, and that one worked out pretty well. See, it gave you a nice little setup. There's been a lot of great patterns to trade in the market during this nice market volatility action we had. Um, let's see what any other stocks I'm missing out here. Let's see price line. Let's take a look at price line. That was a nice little momentum stock showing relative strength. This one got rejected and it's back below 1,000. All right, let's take a look at some of these other big boy stocks. Google. Oh, Google actually showed some decent strength today, up $2.19. Got a nice little bounce off the lows, off this little support area down here. Google, they have earnings coming out next week. Let's see, IBM. This has been a weak stock. This one actually got a nice little bounce today as well, up $2.60. They have earnings coming out. Looks like on the 16th of next week. Little inside day on IBM, so keep an eye on this one for tomorrow. If it breaks over this 182 level, he could catch some legs up towards say 183, 184. So aside from that, folks, don't want to go over too much. We're going to have some more stuff in our chat room tomorrow. Make sure you come check us out, mywallstreettv.com. Password to log in the chat room is SMART, S-M-A-R-T. If you want to get more than a 14-day free trial to check it out, make sure you fill out the form on the right-hand side of the home page of wallstreettrading.com. Have a great day, folks. Channel Guy Trader signing out. Cheers.